Bitcoin's price finally woke up, and it chose violence. It's up over 7% in the last 24 hours and up over 22% in the past 3 days. I thought it was dead. Some people believe that Bitcoin's rising because the president hinted at a potentially sizable position in Bitcoin. Some people think it's just the market front-running the Clarity Act vote on September 15th. But none of those things actually make sense. Maybe it has to do with something more magical.
There's nothing magic about the 40 trillion number, and we can grow our way out of that.
Today I'm going to break down what's actually going on and why the big print that we've been talking about forever is actually starting on September 9th. We've got a lot to cover. This is Dante Cook with Bitcoin Simply. Let's go. That's my vibe right now. And what do you know? Jim Cramer's sell signal was actually the bottom.
Arvin Christian knows quantum incredibly. He knows Bitcoin and quantum, and I'm going to sell mine.
You are?
Yes, absolutely.
Really? Just on what he said?
Well, he's the man. He's the man. 3-4 years. David, you know when 3-4 years is going to happen?
By the way,
tomorrow.
Did he give you any reassurances in terms of what happened last quarter?
I felt yes. I don't know if we have a little sound about how things are going since then, but yeah.
Okay.
Bitcoin is up 25% since Jim Cramer said he sold all of his Bitcoin. Sorry, Jim Cramer. Michael Jordan tears over here. Bitcoin ripped past 76K overnight, and some believe it's really driven by the ETFs. The ETFs had 5.3 billion in volume in a single day. BlackRock cleared 4.4 billion itself. That's not a random Tuesday or event, that's real allocators moving real money at real size. But honestly, what is going on? Why is Bitcoin moving this way and why is it happening so violently and so quickly? Let's get a few perspectives. Let's start with the CEO of Van Eck.
100K now, later in the future? I mean, could it go high? But in all seriousness, what do you see as likely to be the next move? How high? When?
Well, so far the move is all short covering. There's been $3 billion of short liquidations in the last 24 hours. It's an all-time record. So, feels like if we get the real money stepping in, maybe we go higher. Nothing is in a straight line. I told you guys 100K would be next year. Still believe that. And then, long-term, 2029, say we can hit 500K if the cycle plays out as usual.
He thinks that the only reason that Bitcoin's moving is because of the short seller selling. Sure, it was the biggest liquidation of all time in a single day at $3 billion in shorts being liquidated. But why were they being liquidated? Who was being liquidated and for what reason? And that's the question that Andrew Ross Sorkin asked Brian Armstrong. Let's take a look.
Bitcoin bounced yesterday. Your stock also bounced yesterday. I'm curious how much you think that was a bounce off of the back, effectively, of the meeting that you had, or it was really off of the bounce. I don't know if it's a bounce, but really in reaction to what Scott Bessent did yesterday.
Yeah, well, I think those are both good theories. I'd like to think that people are reading the tea leaves a little bit on a few things regarding the Bitcoin price. One is that we've been in a bear market on spot crypto trading for the last year or so. And if you look at the prior bear markets, they each lasted about, 370, 380 days. We're basically coming right up against that, where people, they're going to say, well, this one's about over, and it's time for the next bull run in crypto. They're also looking at this September 15th vote for the Clarity Act. And then traditionally, following the Bitcoin halving cycles, like October, November, December, these tend to be good months for Bitcoin. So I think there's a good chance we're on the cusp of the next bull market for spot trading in crypto.
I do believe that we're on the cusp of Bitcoin's next bull market, like Brian alluded to. But his answers were way too simplistic. It went up 7% overnight because retail finally decided to wake up. What did they do? Sell all their Nvidia stock? They stopped gambling on DraftKings because they thought Bitcoin was now suddenly a good investment? Not likely. It's also not likely that people are front-running the Clarity Act vote, which we know is already going to happen, which was priced in, that's happening on September 15th. Something much bigger is happening. And like we alluded to in the episode last week with Dr. Jeff Ross, Bitcoin is no longer a micro asset, but it trades on macro moves. It moves when the macro environment shifts. And it seems like something shifted violently. And I think I know what it is.
There's nothing magic about the 40 trillion number, and we can grow our way out of that. So, but what we do want to signal is, I think that there's been a lot of misinformation in terms of what's going on with the deficit, what's going on with the deficit to GDP. We actually had a fiscal consolidation for the calendar year 2025. We were at about 5.7% of GDP. And one of the things that's temporary here that's influencing the deficit has been these tariff refunds. And we won't have to do that again. And the Ambassador Greer, through the 301 process, is re-implementing the same level of tariffs. And I would expect that our 2026 tariff income is going to be roughly what it was in 25. And we're going to be able to keep that in terms of the budget consolidation. The other big item in the budget that we're seeing is
I'll spare you the rest, and I'll cut him off here because Scott Bessent starts to ramble and he starts to just double down on things that he's already said in the past, and he does it more confidently. He tries to make people sound like an idiot. But the part that he said that really tripped me up is there's nothing magical about $40 trillion. I mean, what's a trilly between you and me and us friends? With the federal debt sitting at $40 trillion, we're roughly 120% of GDP, and we have $1.4 trillion in interest payments per year. You see, what had really happened was the bond market is calling the United States bluff. And so when the long end of the curve went over 5.2%, well, they need to intervene. And so what did Scott Bessent do to drive bond yields down that drove the stock market up and assets flowing into hard assets like gold and Bitcoin? Well, the thing that he criticized his predecessors for years, he actually went to implement, which is a form of yield curve control. Let me explain. The Treasury announced that they're going to be doubling their long end yield buyback starting September 9th, up to $4 billion per operation. So effectively, this is QE. Bessent is going to issue T-bills, which are bills on the short end of the curve with low duration. The Fed is going to buy them. Scott Bessent is then going to use the proceeds to buy the long end of the yield curve, the 30-year bonds, to drive those prices down, which is effectively QE, except the Fed's not doing it, it's coming from the Treasury. This is yield curve control with a different name tag. And this talk about the United States being able to shrink its debt load has only happened one other time in history. And the United States didn't grow their way out of their problems. They implemented financial repression. There's only one thing that they can do at this point, and there's a term that Lyn Alden effectively uses called nothing stops this train. And this is exactly what she means. The debts have to be repaid, and right now with the conflict going on in Iran, they have to be repaid at higher and higher rates, which are unsustainable for the world reserve currency. Listen to what Lyn has to say if you don't believe me.
So what does all of this mean for Bitcoin and the move higher we saw, the violent move higher we saw yesterday amid forced liquidation and a short squeeze?
Yeah, so Bitcoin, I mean, the sentiment's been very low. The fast money has long since moved out toward AI names. And as we saw, I mean, even a fairly small move in price and in Bitcoin terms caused kind of record liquidations, which shows just how bearish the sentiment and positioning was. I think that, while this could be another false breakout. I mean, May, we saw higher numbers and we rolled back over to slightly lower lows than we saw in February. So I don't think Bitcoin's out of the woods yet, but I do think that by almost every metric, Bitcoin is near the low end of its valuation and sentiment range. Fast money's washed out. Strategy already kind of recapitalized its dollar position, so it kind of took that overhang of potential kind of further selling off the market for a while. There's really not a lot of downside catalysts for Bitcoin left. And even relatively small upside gains at this point can attract new types of buyers. Once people see that the chart doesn't look bad anymore, you can get technical traders coming back in. If you get further momentum, say months from now, you could get more momentum traders back in. So I think, with a multi-year time frame, Bitcoin is positioned here, both just fundamentally from where money has gone, but also from the dynamics we just talked about, basically that they're going to do some version of financial repression between the Treasury and the Fed, potentially alternating, and the ultimate beneficiary of that is hard assets that are underowned.
In terms of what could trigger some of those upside gains, at least in the nearer term or maybe even in the longer term for Bitcoin, I mean, should we be talking about the reemergence here then of, say, a debasement trade, especially when you see gold, for example, now surpassing U.S. Treasuries as the world's largest central bank reserve asset?
I think long term, yeah. I think some of these trades got ahead of themselves. I mean, last year, Gold had that 2-year very strong run that culminated at over 5,000. Bitcoin briefly got over 125,000. Strategy was trading at, 3 times, its net asset value. And so things were heated. And I think that the correction was warranted across a number of these assets. But I think the long-term story remains in place that, when a country gets this indebted, there's various techniques to basically gradually try to inflate away the bonds. That currency itself is generally what takes the hit. And if you own scarce assets, whether it's high-quality equities or hard monies in this case, as long as they are not too over-owned or overbought at the time, they tend to be beneficiaries. And right now, I think Bitcoin's kind of near the bottom end of its cyclical range, which I think looking back 2-3 years from now will be seen as having been a good buying opportunity.
She said by almost every metric, the bottom is in. The fast money's out. Strategy's going to be buying. This is a buying opportunity. The Treasury and Fed are moving to financial repression. There's not many downside catalysts left. And she's right. Besson says that they're growing. Lyn calls them what they're actually doing, which is financially repressing people. But it's both sides of the same coin. In order to get out of this, they need to print. They need to print more money than what their current liabilities are running with their deficits. And this is the exact environment that Bitcoin was built for. Before we go any further in the episode, let's thank our sponsors. Ledn has been the leader in Bitcoin-backed loans since 2018, allowing everyday people like you and me to borrow against their Bitcoin stack without selling it, without having any capital gains. You can just borrow up to 50% of the loan to value you put into the platform in fiat dollars and have that money in your account in less than 6 hours. There's no credit checks. Your money's not lent out or rehypothecated. It's just a simple, sovereign way to borrow against money that you've saved, just like the wealthiest people on the planet. Get started with Ledn today. If you don't want to sell your Bitcoin, you don't want capital gains, and you don't want to deal in the credit system. And if you want to start making your way out of the financial system, well, think about becoming sovereign over your assets, not giving your money to a bank and giving someone else the trust and responsibility of owning it and maintaining it. You become sovereign over every part of your financial future. You could do that with the Bitcoin way. Members of their team will walk you through step by step exactly how you do this, and they'll give you confidence and clarity on how to do this the right way. Schedule a free 30-minute meeting with the team at the Bitcoin way. They'll hook you up. An old colleague of mine, Hafa Zaguri, is the new CEO of 21 Capital. He posted this tweet the other day. Bitcoin at that time was stuck at $9,000. And he pulls it up every single time that the price goes quiet, when it goes dark. See, what he's trying to point out is that there's oftentimes months of pain, maybe years of pain, and a few days of momentary bliss. That's when Bitcoin makes the majority of its returns. And for the people that are buying and selling and not just holding and maintaining a confident thesis throughout the entirety of holding their Bitcoin portfolio, well then they don't actually get to capture the upside gains on days like yesterday. The question still remains, what is actually driving these massive short-term liquidations? It's definitely not people front-running the Clarity Act. It's a macro move. And it's the $300 trillion bond market dictating what happens in the rest of capital markets, which has always been true. James Lavish told us exactly what was going to happen months ago.
If you have a prolonged conflict, that causes energy prices to spike enough. That causes the Fed funds futures and overnight rates to stay where they are, and for investors to demand a higher yield on long-term bonds or long bonds, 10-year, 20-year, 30-year bonds. If they are demanding higher yields because they know that there's this excessive inflation out there, then what's the play? I mean, if you have a 10-year that's at over 5%, I mean, the U.S. Treasury can't refinance those 10 years with more 10 years. I mean, that would be catastrophic if we started refinancing 10, 20, or 10 or 12, 14, 15 trillion dollars of debt at 5%. That's not going to work, So what do they need to do? And then you're talking about locking in 5% for 10 years plus. You can't do that. So what would they do? They would go out there and buy them instead. And that's the yield curve control. And that's the expansion of the money supply. And that's where you have the debasement trade really comes into play for these long-term assets that are not, you can't inflate them. Things like gold and things like Bitcoin, because they're going to be critical in this. We will see money printing. You will see yield curve control, no matter what they call it. And you'll see assets like gold rip higher and Bitcoin also.
As conflict in Iran continues, oil stays higher, inflation continues to stick around, growth slows for the United States, and the United States debt load continues to get higher with most of their bills needing to be refinanced around now. And so in that world, bonds must go higher. And if bonds must go higher, the United States can't afford for that to happen. And so they need to act. This is the big print. This time QE is not coming through the Fed, but it's coming through the Treasury in the form of buybacks. If you've been following this channel, you know exactly the difference and why it still doesn't matter. They have to print their way out of this situation, and when they do, money is going to flow into the sovereign asset like Bitcoin that's built and designed for scenarios like these. If you've been subscribed to the channel, you already know the deal. But if you haven't, well, lock in, because we drop fire content like this 7 days a week. And people who seem to be calm, cool, and collected while everybody's screaming and running around like crazy people are the people that watch this channel, because they know what's actually going to happen next. They're the people that believe in Bitcoin long term. And if you're one of those people like me, you find ways to stack any way that you can. Use our partner SAS Mining to help you get into Bitcoin mining, which allows you to buy sats at a cheaper rate than you can by yourself. You give them money, they mine Bitcoin through clean, free, renewable energy, and they send sats directly to your wallet. You get all the benefits, the tax write-offs, everything else, but you don't have to mine Bitcoin. Get started with SAS Mining today. This is Dante Cook with Bitcoin Simply. Happy Friday. Happy stacking.